Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stenivek on Bloomberg Radio.
We start with the latest on the effort to bring an end to Russia's invasion of Ukraine. It's certainly been a whirlwind stretch as President Donald Trump pushes to end the war, now in its fourth year to an end. He held a summit in Alaska with President Putin last week. Talks, of course, at the White House with Volodymyr Zelenskiy and European allies yesterday. Jen Delowy is Bloomberg News senior reporter. She joins us from the White House. Jen, I want to start with the latest in this idea of a bilateral summit ahead of a trilateral summit. We're learning additional details on where that could be held. Are we getting any details on a timeline here?
Yeah, also for the bilateral summit, which, let me just take you back for a moment. The president had originally discussed having a trilateral summit be the outcome of yesterday's meeting with the European leaders. In the end, he said that the actual plan now is to proceed first with a bilateral summit between Zelenskiy and Putin. The timing on that is a little bit uncertain. It's not quite clear when that will happen. Germany's chancellor indicated that it could happen within 2 weeks. And the White House press secretary just indicated to reporters that, Trump is scoffed at the idea of waiting 4 weeks for a meeting. So we've got at least some indication that folks want to get this done in the next couple of weeks. There is some reporting out from Politico today that Hungary and Budapest specifically has been scouted as a possible location for a trilateral summit, one that Trump would later join. But no details have been confirmed from the White House at this point. And right now, there's still just an effort to get these talks to occur. One important note is that a Russian aide to Putin last night said that Trump and Putin had only discussed the very idea of a bilateral discussion. The White House press secretary told reporters today that, in fact, Putin had promised that direct meeting.
Yeah, Jennifer, maybe expand on that point. Give us some of the context here about just the reality of the relationship between Zelensky and Putin and whether a bilateral meeting is actually realistic, that we would see that, just given their relationship.
It would, of course, be remarkable. But then again, yesterday's meeting at the White House of all these European leaders who flew to D.C. On barely a moment's notice was also remarkable. What's notable here is that Trump has repeatedly said some of these details are so sensitive, they really need to be hammered out by Ukraine and Russia, that they really can't be dealt with interlopers. And Zelensky, certainly seemed supportive of this yesterday. The talks are ongoing between U.S. and other and Russia and Ukrainian officials to get these going, according to the White House press secretary today. So at this point, it does look like this is the next step. The bigger question probably hanging over this, or one of the bigger questions, is, whether the fighting in Ukraine will continue and whether the European leaders' efforts yesterday to encourage Trump to once again embrace a truce that he says is not necessary to broker peace, to get that back on the table.
Hey, Jenna, I wanted to shift gears a little bit and talk about security guarantees here and what exactly security guarantees would look like in the context of Russia's invasion of Ukraine, especially in an environment where obviously the U.S. over the last 3.5 years has not sent troops to the area. Would it be a UN peacekeeping force? Would it be a NATO peacekeeping force? What would it look like?
Right. I mean, security guarantees were really the biggest topic of discussion. They loomed large in yesterday's talks. Ukraine and European allies are wanting to ensure that any peace deal now doesn't lead to a Russian incursion in the future. And Trump has made clear that, these security guarantees are a possibility in really in lieu of Ukraine joining NATO. He reiterated this morning that Ukraine joining NATO is not tenable from Russia's perspective, but the U.S. has discussed these NATO-like security guarantees. So what could that look like? Well, Trump is saying it's not going to be American boots on the ground, and he's been very clear about that. It's been reiterated here at the White House today, but the president has left open the possibility of American pilots and aircraft being involved in providing some air support in the region. The president has said, if there are military forces on the ground, that's European countries that would supply those ground troops. And of course, we also have President Trump very proud of having brokered kind of a deal for America to sell weapons that would be financed by or purchased by European allies to be used in this conflict. That's the kind of arrangement that could also continue.
Is there appetite for European leaders to send their citizens to that area of the continent?
Well, Trump certainly made clear yesterday that he sees any kind of on the ground presence coming from Europe. And he's drawn this line in the sand about American support. What we heard from European leaders was this united show of force, in wanting to end this conflict. And as Emmanuel Macron emphasized, we want peace now. We are committed.
What do we watch for next? What are you going to be monitoring for next as we kind of await this potential bilateral meeting?
The biggest question, one of the biggest questions right now is does this bilateral happen? When does it happen? How quickly does it come together? I mentioned the commentary from Russia last night that suggested this might not be as baked a plan as certainly Trump's Truth Social post last night had indicated. That would, that has created some uncertainty over the next steps in the process here. So really seeing any indication that bilateral summit is going forward and going forward quickly, I think is the biggest thing we're watching for. We are looking, of course, for the evolution of any possible financial deals tied to these discussions and tied to security guarantees. And of course, any discussion around the form of these security guarantees, very much still after yesterday, a topic of lively ongoing discussion between Russia, between the U.S., between Ukraine and European allies.
There was some reporting yesterday that indicated the president left the meeting to call Vladimir Putin of Russia. Do we have any reporting now about the content of that call, the duration, anything like that?
We know that again, this extraordinary meeting paused essentially in the East Room so that, and had continued, of course, in the Oval Office, paused so Trump could do this direct call to Putin and essentially provide a readout of what was being discussed. The White House indicates that was something European leaders supported. We know that, Trump had promised he was going to do this call with Putin afterward and believes that this kind of interaction is facilitating a deal. But again, there's some variance on exactly what was agreed to with regard to the next steps in terms of that bilateral meeting.
Jen Deloe, Bloomberg News senior reporter over there at the White House. Jen, thanks so much. Check out her reporting, the entire team's reporting on the Bloomberg terminal and at Bloomberg.com. Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Sometimes the story's so good, you just have to read right from it. And that's what I'm going to do. He didn't campaign on it. It wasn't even broached during his first administration. He criticized his predecessor for it. But this month, President Donald Trump made clear that he's willing to use the full force of the U.S. government to directly intervene in corporate matters to achieve his economic and foreign policy goals. So writes Joe Doe. He's Bloomberg News economic statecraft reporter. He joins us in Bloomberg's Washington, D.C. bureau. Joe, we're talking about NVIDIA, AMD, Intel, MP Materials. Describe from an economic statecraft perspective what the administration has done and is doing.
Yeah, you have the President of the United States and his entire administration, which, by the way, has a number of Wall Street pros in it, saying, why don't we use the full force of the United States federal government to take direct involvement in corporations that we deem crucial and central to national security. Tim, I know you and I have sat here many times and talked about the MP Materials deal and where that stands today. I mean, the AMD, NVIDIA 15% cut of Chinese AI chip sales that goes to the federal government. I mean, that's massive. And then now the reporting that we've had from Bloomberg for the past 5 days and now confirmed by Howard Lutnick this morning, that this administration is looking to take an equity stake in Intel. I mean, like to say this is, off the beaten path, I mean, understates just how wild this is and how new this is, even to Washington policy pros and Wall Street pros who've been doing these jobs for decades.
Well, talk to us about that, Joe. What makes these actions so unprecedented and so unlike different kinds of, government intervention in companies that we've seen before in the United States?
Yeah. I mean, if you think about it, we can look back to the financial crisis where we saw the bailouts of the banks, of AIG, of GM. I mean, these were under extraordinary circumstances, right? There was real fear in the federal government and in the markets that you could have a complete collapse of the financial system if the U.S. government didn't step in to provide liquidity to the market. This is different. This is companies that they're not on the verge of bankruptcy, that we're taking equity stakes in. These are not, and then we're taking cuts of sales, supposedly. I mean, we'll see how they follow through on it. Typically, what we have seen, even with the Trump administration the first time around, was, well, let's do things through trade, right? Let's use 301 tariffs, which are country-level tariffs. Let's do 232 tariffs, which are sectoral tariffs. These were written into U.S. law, even though they hadn't been used in years or sometimes decades. They were there, and they had been used before. I think this is starting to push the boundaries of those legal questions.
Did the word nationalism or nationalizing companies come up at all in the reporting here and in the folks you spoke to? You go into some detail about the so-called Chinese model, but there's also, Argentina comes to mind with nationalization in the past. Other countries as well. Go ahead.
Yeah, totally, Tim. When you talk to people, and again, this isn't just like a couple guys on Wall Street or like one guy, sitting in a law firm. This is across the spectrum, and you hear over and over again, uncharted territory, Chinese model. And like you said, the question of nationalizing companies. Like I had one source say, listen, there are ways the federal government can step in and direct the actions of companies. And you can do that without taking a stake in the company. You start doing these things and it does spread worry, right? It spreads worry among investors who say, well, wait a minute. If you're going to choose national champions, that you're just going to wake up one morning and say, we're taking a stake in this because we think it's critical to U.S. national security, that changes fundamentals of making bets on companies, right? I mean, one person mentioned to me, you have high valuations already. What happens if you have the federal government starting to get involved with some of these high valuation companies? I mean, those are the kind of conversations that I was having over the course of last week that really became the idea behind this story, right? Which is this idea of America Inc. and seeing for the first time the President of the United States taking direct action in corporate America.
Yeah. What have investors said so far? I mean, I'm thinking specifically about Intel on like whether this is good for the company or not, because yesterday when Bloomberg News reported that the government was taking a 10% stake in Intel, the stock fell almost 4%. It was up all of the week prior. So I don't know if that was profit taking. Obviously, it's up almost 7% today. But can we read into the price action that we saw yesterday?
When it comes to the daily trading of Intel, I think it's hard to tell. I think Lutnick's comments this morning, indicated, listen, we can take this stake. There are questions over how the CHIPS money, is actually being used. And in the case of like taking an equity stake, it would actually be good for the taxpayers, which is far more important to the administration than, necessarily the investors of the company getting a boost in profits. But I think when you look at all this, we are in what a number of these people told me, which is uncharted territory. Is it good? Well, some people would say, listen, to compete with China, because let's be clear. One of the things the White House said to us in our story was, semiconductors, rare earth, steel, these are national security issues and long have been for the President of the United States. Those also happen to be issues that are directly tied to China, something that the administration sees itself in direct competition with. Steel has been in oversupply for a long time out of China. That's one of the reasons the president moved in his first term to put up trade barriers on steel. Now, this time around, the quote-unquote trade war, or just no quote-unquote, the trade war between the United States and China centers around chips and permanent magnets. And the permanent magnet story is already told. MP Materials gets a $400 million preferred equity stake from the DoD. And then the Intel question is obviously up in the air right now, one that the administration is considering. I mean, that's what you really have to start looking at, which is like, what else does the President of the United States consider central to this national security question, in particular, maybe with China? That's
exactly where I was going to go. So based on your reporting, the folks you spoke to, what's next here? We have U.S. Steel, we have MP Materials,
right?
We have Intel, we have news around AMD and NVIDIA. What do investors need to be prepared for the next shoe to drop?
I don't know, Tim. I don't know.
Would it be like do autos get on your radar at all?
It's hard to tell. Listen, Bloomberg has reported, particularly around the MP Materials deal, we had reported that MP Materials looked like something was being lined up by the DoD, and it wouldn't just be the only one. Some of the reporting we have had is that the Intel situation may not just be a one-off, right? Like the things I have heard are this administration is keen on taking home run swings and not just on one thing, right? So I think at this point the market is looking into the question that you're asking, Tim, like what is next? I think it's hard to know what's next. I mean, so much of this, it's important to say, is so fluid. The conversations are just ongoing, and what they might be talking about today might completely change in the next 24 hours.
Joe Doe, we know whatever comes, you will be on it. It's one of the most read stories on the Bloomberg terminal. President Trump targets America Inc. with a new brand of U.S. statecraft. Joe Doe is economic statecraft reporter. He joins us from our Washington, D.C. bureau. Stay with us. More from Bloomberg Businessweek Daily coming up after this.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
It is Bloomberg Businessweek Daily, and look at that. It is time to drive to the close. I want to talk Home Depot because shares are higher. Sales returned to growth in the second quarter. Shoppers invested in smaller projects such as lighting and gardening. The CFO said customers are putting projects on hold but are not canceling them, and that most of Home Depot's merchandising departments saw sales gain. Let's bring in Abby Roach, Senior Portfolio Analyst for the Empiric LT Equity Team at Allspring Global Investment. She joins us from McLean, Virginia. The Empiric LT Equity Team, it's one of the investment teams over at Allsprings. They manage about $14 billion across 3 large cap portfolios. And we want to talk to Abby because Abby handles the consumer stocks portion of this. Abby, good to have you back with us. On the Home Depot side, what did you learn about the consumer through Home Depot's earnings today?
I think it was a great update from the company. I think in terms of the print, a little bit of a miss on the top and bottom lines, but I think our most positive takeaway from listening to the call was just the constructive tone from management. They really hit the nail on the head in delivering a positive message about underlying demand. They called out the best performance that they've seen in the last 2 years, with 12 of the 16 product categories delivering positive comparable sales growth. So we were really encouraged that a lot of positive underlying fundamentals, and maybe just most importantly as it relates to the U.S. consumer, it was the 3rd consecutive quarter of positive U.S. comp sales growth. Before that, there were 8 consecutive declines. So we're really encouraged to see some positive momentum in terms of the U.S. consumer for Home Depot, just as a result of some continued momentum.
Is this a Home Depot specific kind of categorization, or can we draw things about the broader U.S. consumer from your work?
We think, in terms of the update from Home Depot, I think there were a lot of positives in terms of their own execution, specifically around the Complex Pro, some of the recent acquisitions that they've done. In terms of this as a broader read through for the U.S. consumer as a whole, I don't know that necessarily this is indicative of something different as it relates to the consumer. I think it's more indicative of Home Depot has continued to execute. But as it relates to the health of the consumer, I think really what we've continued to hear is resiliency in terms of the U.S. consumer, not just from Home Depot, from different other consumer companies and retailers that have reported so far. But really, I think maybe the one constant message that we've heard is a bifurcation between the lower income consumers, which are continuing to be a bit pressured, but then those middle and higher income consumers are continuing to be really resilient and continuing to drive that spending.
I mean, this is something we've heard, Abby, for years at this point. And you know, the so-called K-shaped recovery that we've talked about since the pandemic. Is that enough? Then I realize it's a question that's, you know, we obviously want to take into account every consumer in the US, but from an economic standpoint and health of the economy standpoint, is that enough to carry the US economy?
I think thus far it has been. I think in terms of when you look at the dollar amount and the dollar spending, it has been enough to carry the US economy so far. But again, that spending has been driven more so by those higher and middle income consumers, right? Because those lower income consumers, we just continue to hear that they're pressured. So I think as long as the consumers, those middle and higher income consumers can continue to drive that spending, I think they can continue to drive the economy. But ideally, we want to see all of those consumers be able to continue to drive, you know, incremental spending.
Where else are you finding opportunity right now as the consumer stocks analyst? Do you stay in consumer stocks? Is it consumer staples, discretionary? What's exciting to you right now?
I think there are definitely different pockets. I think there are pockets that we like and pockets to avoid in terms of there's a lot of different challenges as it relates to the consumer companies, whether it's the health of the consumer, how exposed they are in terms of income, whether it's related to tariffs, which continue to be a challenge in terms of impact to consumers and messaging. But really, we think sort of what we look for companies are those companies that are able to generate excess free cash flow in excess of their peers, regardless of the business cycle. And we think those are the companies that can continue to drive their own destiny, regardless of the business cycle. And I think in this case, you know, Home Depot is one. They're continuing to invest in projects that will drive growth for the long term, with the Complex Pro, with the Pro initiative, and are doing a really good job navigating a challenging macro environment and a challenging environment from an interest rate standpoint, but continuing to execute quite well despite a less than favorable backdrop.
So let's talk a little bit about Walmart. The company is set to report earnings on Thursday. Shares so far this year up 12%, which I believe is, outperforming the S&P 500 so far this year, up 9%. What do we need to watch for with Walmart? Because there are a lot of questions about to what extent this company is passing along costs to consumers versus absorbing them.
I think, you know, first and foremost, Walmart will be an important bellwether for how the consumer, anything that they say that might suggest, you know, pockets of weakness or improvement is going to be really important, just given how representative they are of consumers across this country. I think in terms of looking at the valuation of this stock, one of the really important things in what has driven this stock, you know, for not even just year to date, but over the last year is a lot of the investments that they've made around growth for the future, specifically a lot of the e-commerce, digital, the membership side of the business. And I think it will be an important read on the health of the company as to how well those are continuing to grow. But also as it relates to the consumer are they continuing to gain share with higher income consumers to get a read on how the consumer more broadly is feeling?
Abby Roach, Senior Portfolio Analyst for the Empric L team at Allspring Investments. Thank you for joining us.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
This one's special for you because we're talking about New York City subway. The MTA runs New York City subways, buses, and commuter trains that 6 million people rely on each weekday. And on Monday, board members approved close to a $2 billion contract to expand the 2nd Avenue subway line into East Harlem. Jay Patel is the CFO of the MTA. She's charged with quite the task, which I think is fair to say many would find unenviable, charting a sustainable path through one of the agency's most financially trying periods in its 6-decade history. She joins us here in the Bloomberg Businessweek studio. Jay, welcome. How are you?
I'm good. How are you, Tim? Thank you for having me.
Yeah, thanks so much for joining us. I want to start with the numbers and just ridership here. Weekday subway ridership is still 25% below pre-COVID levels. In your modeling, does that ever come back to where it was?
We have a financial plan that's a 5-year period, and originally we were projecting that we would see our subway ridership up to 90%. But a couple of years ago, we revised that because we weren't seeing that. But we're hopeful we see an 80% by 2029 ridership recovery for subways. But on the railroads, we're seeing that recovery even higher today. We see 85% ridership recovery on our railroads, which is amazing, something that we thought was going to be slower, our railroad customers, than our subway customers originally coming out of pre-pandemic.
So is there a way to tap into that growth financially, perhaps with higher prices for those commuters rather than here in the city for subway and bus riders?
So, what we have is very small, predictable fare increases that help balance the financial plan. And so we don't want to burden one rider over another. It's really about distance-based and commuters. And so we keep that equitable. You know that we do a 2% fare increase every other year, and that keeps our financial plan in balance.
How do you plan to get that number? I think you said 80% ridership. How do you bring people back into the subways?
We bring riders back by providing reliable on-time performance, right? Our service matters to customers, and delivering the service that we promise and schedule is something that we strive for, but also safety. Our customers need to feel safe, and our customers feel that, right? We've had the lowest safety numbers or crime numbers in July, and so our customers are telling us that by taking the subway, but also our customer surveys, right, tell us that customers are satisfied with the service that we're providing.
The MTA faces a combined $1.1 billion deficit over 3 years starting in 2027. It already owes close to $50 billion. It needs to spend $68 billion more for vital improvements. There's some federal aid that's up in the air. The Trump administration is trying to roll back congestion pricing. What's the backup plan if the aid evaporates and the president is successful in rolling back congestion pricing?
Tim, I would be remiss if I didn't mention that back in 2023, we were the first transit agency to solve our fiscal cliff. Thanks to Governor Hochul, Chair Lieber, and the legislature, we were able to come out of a deficit unlike any other transit agency today. You've heard SEPTA is facing deep cuts, Chicago, but we were the first to say we need state, federal, and local aid, and we got our state federal funding for us. We also, as the MTA, contributing to our solving our deficit, right? The MTA contributes $500 million to its operating efficiencies. And those deficits that we have in 27 and 28 and 29 are very small compared to our operating budget. And we are committed to doing our part in saving money to help ensure that we can balance our budget in the out years.
We were talking a little bit about the base fares of subways increasing regularly. I'm wondering if is there a set area within the MTA that revenue goes toward? Because the base fare for a subway in New York City, it's expected to increase to $3 in January.
Correct. So our fares help our operating budget, right? So 70% of MTA's cost are labor and fringe. And so that pays for 70,000 employees. And then the small fraction is for the non-labor contracts. So every fare contributes to operating cost on our side.
Let's talk about fares and fare evasion. Usually when we talk fare evasion, I think of people jumping over subway turnstiles. And I know there have been some mitigation efforts in place, but I took the bus to LaGuardia on Thursday. It was a great experience, but when I got on the SBS in Queens, it was like an articulated bus, so, it was a long one. I got on in the back, and out of like more than half a dozen people, I think I was the only one who paid. And I was thinking to myself, I didn't know it was optional to pay to get on the bus. What are the numbers there?
So it's not optional, right, to pay the fare. We are encouraging every customer to pay their fair share to.
But there's no
the
enforcement
MTA.
on the bus.
So there's a couple of things that we're doing for fare evasion, and our chair has been tackling this first when he became chair. So on the subways, you've heard of us talking about we're doing fins, sleeves, gate guards, enforcing the exit gate, which is the fare evasion highway. And so we've made great strides on the subways. We've reduced fare evasion in over a year by 30%. We've dropped that rate from a high of 14% to 9.8%. So we know those efforts are working. On the buses, it's a little bit more difficult, but we're also working there. We've decreased fare evasion on our buses as well in the last year from 50% to 44% because of all the tactics the president of New York City Transit is employing. We have Eagle teams that are on different bus routes to make sure that they are enforcing the pay your fare, right? Our bus operators do their due diligence, but really our Eagle teams are enforcement out there riding different routes and making sure customers pay their fare, or they're getting a summons, or they're getting off the bus. And that's how we're working towards
How
that.
does that work? Because I heard of a friend who was on a bus and someone had come around and scanned their phone to see if they had paid the fare. Is that how it works? Explain to us.
So right now, what we are doing is if you're boarding the bus, you have to pay because there's two different ways you can pay, right? Today is the Metro card and the Omni. And when we go to full Omni next year, there's going to be proof of payment. And so what you can do is European style proof of payment for customers is you can tap their phones or credit cards, the method of payment to see if they paid their fare. And if they didn't pay their fare, that's something that we'll work with on a summons, or, you need to pay your fare for our customer. And so that's something that's coming. We're really excited about that for Omni and proof of payment. But right now there's two different methods. And so we're working on different ways to combat fare evasion.
I want to talk a little bit about proposals from mayoral candidates. Zoran Mamdani, for example, his proposal to make all New York City buses free. What do you think of that? And does it create a sort of a two-tiered mass transit system where people who ride buses don't pay for it, but then people who ride the subway do, and it kind of offset people not necessarily taking the right mode of transit for their destination?
So we've heard the mayoral candidates' proposal for fare-free buses. What I'd like to emphasize again is fare box revenue is important to the operations of the MTA. It's 26% of our revenue. And buses is about $1 billion in the out years of revenue for the MTA bus. For the MTA, excuse me. And that's important to us. And so we want to make sure revenues equal service. And that is something that's a hypothetical right now, but we rely on fare box revenue.
So you said $1 billion in revenue is what it brings in. Mamdani estimates that it's about $750 million annually to make buses free. Is that an accurate assessment on his part?
I think there's pieces that he's looking at just the New York City Transit bus fare. We have MTA bus that we also run that the city contributes to, and that is also fare box revenue for buses.
So what would taking away that revenue from the MTA do to the authority's finances? Or would it just be, look, again, it's a proposal. You said it's something that, is not a plan yet.
Yes.
But to be fair, he is by far the favored candidate. And there are a lot of questions about what power he has to actually follow through with a campaign promise such as this. But this is certainly a central part of his campaign. So you got to be looking at it closely.
We are looking at it. But one thing that I would like to emphasize, right now in New York City, fares are affordable. We make transit and buses the most affordable at $2.90. And it's affordable with fair fares, reduced fare for our customers. But, it is something that we will look into as the mayoral candidate has proposed.
What about mitigating climate issues that affect particularly the subway stations? You go online, you see videos of flooding in stations. Or maybe you're
trying to get home and on a rainy day.
Right.
In the summer. And
water in the subway station. Do you guys have, at least as part of the upcoming capital plan, a plan in place to update the infrastructure?
A couple of points on that, right? A couple of the issues that arise in the subway systems are not the MTA's fault. New York City, right, contributes to the flooding issues that we face in the subways, whether it's through DEP, manholes, the sewage. So that is one aspect of the flooding that you see on the New York City transit. But our historic capital plan, that $68.4 billion, does have climate resiliency of hardening the system in certain stations proposed in there for it.
Let's talk a little bit about congestion pricing. Not as hot of a topic as it was a few months ago. It seems like it's died down a little bit. In your view, is it working?
Congestion pricing is working. It is reducing traffic by 11%. What does that mean? 70,000 cars are off the road every single day. What else is it doing? It's moving our buses faster. It's moving people faster. We've seen a change in ridership, but also we've seen safety increases. There's a 14% decline in pedestrian crashes. And on top of it all, it is bringing in the revenue that we had projected originally.
It's being watched very closely, not just by proponents and opponents of it, but also by other cities that might want to put this into practice. Have you or has the MTA heard from other cities about congestion pricing, about the model, and about questions about implementing it in their own cities?
The MTA has heard from other cities and transit properties and engaged with them to have conversations about the process that New York implemented for the successful congestion pricing program that we're having. So they're looking at us as a model.
We have to ask about the Second Avenue subway expansion as well. Just walk us through some of the plans for and the timeline here, because this has been something that's been in the works, something that any New Yorker who's lived in New York for the last
how many years? 40
decades, 50 years.
50. I think we talked about that at our special board meeting on Monday. You know, the contract that our board just approved is a almost $1.9 billion contract to start boring, right? What does that mean? It's starting the tunneling for the 3 stations that are vital to Second Avenue Subway Phase 2. And we are committed to expanding Second Avenue Phase 2 here at the MTA. And we think it's going to be a great service to our customers. It's going to serve about 100,000 customers, in addition to the 200,000 customers that Second Avenue Subway Phase 1 serves today.
Do you have a timeline or an expected timeline?
I think the 2032 was the service date that we have said publicly.
It's a very, like I said at the beginning, it's an unenviable task that you have ahead of you. Some people would argue. I would imagine that you spend quite a bit of time studying other transit systems around the world, what's worked and what hasn't worked. If you could wave a magic wand here in New York City to overcome some of the barriers that the MTA has experienced, whether they're financial barriers, whether they're CapEx barriers, what would those be? Like, what is the biggest obstacle to making the service even better here?
So I think, Tim, one thing that I would say is MTA is a leader, and being the largest agency in North America, other agencies look to us. I think I said this before. We led with the fiscal cliff. We lead with our capital program as well. We have started to do things differently since Jano Lieber took over for C&D and now Jamie Torres Springer. We do design build. We do faster, cheaper, and better. But we're employing definitely different ways of doing capital programs as well as operating for us to be better.
I want to go back to congestion pricing and some financial questions around that, specifically about selling debt off of revenues. Do you have plans to sell debt off of revenues from congestion pricing?
So, as you know, the congestion revenue is dedicated to the 20 to 24 capital program. It is expected to generate $15 billion for that program. And once we see a stable market and the revenues coming in, we do plan to issue debt. We've talked about it. That's not sometime until 2026 for us. Once we see a comfortable stream of revenue, we've projected $500 million for the next 3 years. And we want to make sure that we see that revenue and the markets are comfortable issuing that debt for us.
You've talked about fare increases on MTA services. What about increases in congestion pricing, and what is the timeline for that?
So as the governor has said to us, right, it's the toll will continue to be $9 for 3 years. Then it'll increase gradually to the next 3 years at $12, and then in the 7th year, it'll be a $15 toll. So we've already have that phased in based on the schedule we approved.
Can you just bring us? I know there's litigation around this with the federal government and with the state, but can you just take us into conversations that you've had with counterparts at the Department of Transportation over the last few months about making sure that the MTA stays on a sustainable financial path?
So I think, what I would say is the federal government contributes $2 billion to the MTA, and that's a revenue source that we rely on to keep the system in a state of good repair. And so we would continue to want that funding. MTA moves 40% of riders across North America, but receives only a fraction of federal dollars from Washington. And so we continue to rely on the federal dollars that we get, and it's important for us.
But what's the backup plan if that evaporates?
We're confident, right, that the MTA and the federal government, the federal judge that is assigned, right, we're confident that we would win that lawsuit. Judge Lyman issued a positive finding for the MTA just a few months ago, and congestion pricing is, continuing to operate, and we're generating the funding.
Jen, thanks so much. Oh, go ahead.
Well, I was just going to ask one more question. I imagine, you get a lot of people who hear these numbers. Congestion pricing is on track to raise $500 million. They say, wow, that sounds like a lot of money. Why are the subways still the way that they are? Delays, crime, uncleanliness. Help us just understand. I know that you said that a lot of those fares go towards paying workers, but a number like this, a number like $500 million, what does it mean in the context for the broader MTA organization? Is that a lot of money?
So I'll give you context. Our operating budget every year is about $20 billion, right? That is to run subways, buses, commuter rails, and the services for 6 million commuters every day. But in order for us to keep that system running, you have to maintain it, right? And so $68.4 billion, a good majority of that funding is to keep it in a state of good repair. That means new rail cars, new buses, new signal upgrades, track maintenance, and everything else that goes with operating a system that's so vast in size. So $500 million is just one stream of revenue that generates, when we leverage it, $15 billion to continue with the capital side of the world, but the operating side has different funding sources. But we're confident that we move 6 million customers every single day, and we're happy to do that safely.
Jay Patel, CFO of the Metropolitan Transit Authority, joining us here in the Bloomberg Businessweek studio.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.